Alright guys, Gen Z Rusher here, and today we got a very embarrassing video, to be honest. And you know what? I'm being transparent with you guys. It's my financial journey, and you know what they say, you gotta take a couple punches in the market. Someone can tell you to do something one way 1,000 times, but you're not gonna listen until you take those hard lessons, and I did get some hard lessons last week. We sold for some losses. We did it strategically. We weren't paper handing. It was strategic. And yes, you see some options here. I did one contract. We're learning things slowly with options, but just ignore it. It's just a learning thing. But yeah, guys, we learned a lot of lessons last week. And one of the biggest lessons is beta, right? I don't have SPY, so I look at VOO, and when VOO is a total stock market. When VOO is down 0.5% last week, there were some days where my main portfolio holding, which is YMAX, it was down 1% plus. I've seen it down 2%, and VOO was only down 0.6, 0.7% last week. That means if the total stock market moves 1% in one direction, Yieldmax is like a leverage version. It's pretty much going to move at 2 times the rate the total stock market will move. And this is bad because if the total stock market has multiple red days in a row, your portfolio is going to get shafted. Our portfolio is heavy YMAX, so consider this, and also consider that we're using margin also, so our portfolio drops even quicker when YMAX is down. So yes, we learned a lot about beta last week, and that Yieldmax funds are very high in beta. They move a lot in tandem with the market. No, we did not get margin called last week. We sold out. We sold 1,800 shares of msty. We sold 3,000 shares of YMAX. We currently got, what, 7,600 shares of YMAX left. Looking at the margin, we sold when our margin buffer was 40%. So we weren't near a margin call at all, but we preemptively did it to cover our bottom line, basically. You can see our leverage or margin use is currently $71,000. So we still got $111,000 we can use. And what I'm noticing is you need to be very diversified with your portfolio. This is something that I am not. I'm not diversified. We're all in Yieldmax as a company and all in their funds in general. Very heavy in YMAX, and that's very concentrated, and that's dangerous. Guys, look at this comment right here. This isn't a lesson I learned. This is a lesson I'm learning from someone else. Brokerages can also change the margin maintenance. I went from a 50% maintenance to 100% with YMAX when the ETF plummeted this week. Yo, I have a heavy core holding in YMAX and my margin didn't change, but if it changed from 50% to 100% with Robinhood, my margin buffer, you could say you got a big buffer, you're safe, you're good. No, guys, if they change the margin maintenance drastically, then your margin buffer is gonna, just like that, it's gonna disappear straight up. So this is what I mean by I wasn't margin called, but I did sell out strategically because I'm getting ahead of something like this possibly happening in the future. It might not happen at all. I sold for a loss, and maybe the market starts going up again, and you know, it's gonna sting seeing the market go up. But you know what? I have a substantially bigger buffer. I have substantially less concentration in YMAX. And I mean, obviously I sold 1,800 shares of msty, so I got way less crypto exposure now. But you know what? I can sleep better at night, and the beta in my portfolio is going to be a lot lower. Also, if you guys hopefully made it this far into the video, hopefully you guys check out my Discord in my description. We're trying to build a community of level-headed people. There are some communities that are very biased. They'll tell you to look at total return only. Some fund managers like I guess Jay says that total return matters. We're not going to tell you to buy Ulti. We're not going to tell you to go all in msty because it's the highest yielder or it has the best total return. We don't care about that. We're going to give unbiased information. Like, look, Nima is buying SPY, which is 12%, but it's safer. It's a low beta. We got some crypto people. So hopefully you guys stop by, and we aren't going to judge you on what your strategies are. You might be a total return investor and you might join, and we won't tell you you are wrong. We're going to try to convince you maybe that, hey, you know, there's other ways to invest, but we're not saying that you are wrong. This is how we are doing things, or there's other strategies out of there that you can look at. But yeah, you know, some communities I know from firsthand experience, they'll tell you total return only. Look at how much I'm up. But when the stock is down 50% and you got to reinvest 60%, it doesn't make sense in my head. And if we lay it down to you in an unbiased way, maybe it'll help you out also, because a lot of people, like 1 month ago, everyone thought Yieldmax was good probably until last week, and now everyone is realizing, okay, the beta is too low, I'm spending too much margin, Certain communities won't tell you the risks with these things, but we will. We just want to inform people, and the more members we gain, the more information can be spread around. So yeah, link will be in the description. So yeah, going back to the video, we took a decent loss, and you know what? I'd rather take the loss now than take the loss later. We updated our spreadsheets, and as you can see, it's way more neater than it was previously. It's more consolidated also. You got your stocks, shares, the NAV. We got the average yield, average payout, which is changeable because Ymax has about a 19-cent average payout per share, but we use 15 cents because we are more conservative. Because the more conservative you are with your numbers and projections, the more accurate your numbers are. You don't want your spreadsheet to say you're making $9,000 a month and your average payout is at 19 cents per share when you're actually making $8,000 per month. So that's why we're conservative. I don't know about if we're doing total return. We might just do ROI for the entire portfolio. And you know, this percent to break even, we gotta look into that. Also, I made this all today, so it's not exactly complete. We want to rebuild this chart I had from my old spreadsheet, but we haven't had time to do it yet. So this is another thing. There's two types of investors out there. You got your people who invested, and I am one of them. I thought, and I had a plan, guys. The plan was to invest high yield into Yieldmax, use the distributions like a 40% yield, the distributions from Yieldmax, and invest it into the safer things that are in the green. If it's in green, I consider it safer, but you need to consider the yield also, and the yields are right here for these stocks. So my plan was to invest into high yield and reinvest the dividends into lower yield but more stable funds to lower the beta of the portfolio. The problem is the market, it had different plans for me and we got shafted with it. If you are someone that built your portfolio out of XDTE, AIPI, and the safer yielders that did not move very much last week, and then you reinvested those dividends instead into the riskier things, then you're green basically. You're winning. You were able to buy the dip. I did the total opposite because my portfolio, I did the opposite strategy, which was high yield into lower yielders. I did the opposite, and guess what? Instead of buying the dip last week, we ended up selling on the dip. So, man, you live, you learn, right? We had a plan, and the market literally had different plans for us. You know what? I would rather sell for a loss than have the market force me to sell for a loss because, you know, I wasn't margin called, and a lot of people were, so they had to. They were forced to, but I wasn't forced to. I'm just doing things preemptively. So now with the $111,000, I'm not saying I'm going to use all of it, but we got some money that we can spend into the safer funds so we can start generating an ROI. But yeah, I don't know what like allocations I'm going to be using, but these are likely the funds I am looking at currently. Obviously not Realty Income and SCHD, I mean, but I'm mainly talking about these funds. But yeah, we got to reconfigure our portfolio so it lowers the beta. Hopefully, if you guys are heavy in margin or you guys learned some lessons last week, comment that below. Maybe drop by the Discord and comment there about what you learned, because there was a lot of lessons learned last week. These income funds will drop a lot, and unless it's an index ETF that tracks, you know, T-SPY or SPY, it tracks the total stock market. All right, and now we can go to distributions real quick. Last week we got paid $3,300, which is a very nice distribution, considering it wasn't Misty's week also. But yeah, guys, that's pretty much it for this video. Took some lessons, we took some losses, we made some strategic preemptive plays, and you know, we got knocked down. We're gonna get back up, because if you can't get back up, then you're not gonna get anywhere. Lessons were learned. If you guys made it this far, then thanks for watching, and again, hopefully you guys join our Discord so we can all grow together. Gen Z Rice Shiro out.